Hi friends, welcome back. So headline, Nvidia shares sink up to 8% as tech sell-off reignites. And this has been the story the last week or so. You can see a lot of sell-off in tech, so this is where all the red is. So the question becomes, okay, you've been telling me a fun story the last year or so, right? So Nvidia's been saying, hey guys, we're all gonna be buying AI chips. AI chips are awesome. Every company in the world is gonna want one. And we sell these things for what, $30,000, $40,000 a pop, which is quite a bit. And then Tesla's been telling everyone, hey guys, we're going to have these full self-driving cars. Now we're going to have robots. Everything's going to be awesome. And then when you go into earnings, right, you need to get actual numbers. So, okay, you told me this story. Does your story actually make money? Does your AI actually make money? Do your robots actually make money? In the case of Tesla, I think the stock went down like 12% after earnings, something crazy like that. Nvidia, they haven't had their earnings yet, but you're getting a little bit of jitters because people are a bit worried going, oh, if Tesla's not doing so great and other companies that are kind of in the same, if other chip companies are struggling, we're kind of predicting what is Nvidia going to do. You're trying to get ahead of the crowd. Nvidia is an interesting one because yes, it had a fantastic year. I mean, you can see it's like crazy. The past, year, it's like up 126%. But the problem is I always point out is valuation. You just, you're expecting like really a lot of growth to continue. And I've been saying, guys, it looks like the top to me. It turns out I may be right. We're already down 21%, actually we'll call it 22%, 22% from the top. The sad thing though is that guys, I get it more, I mean, you go to the kids channels and they get, millions of views and basically you just tell kids, guys, this is the beginning. AI is going to be awesome and we're going to keep going up. And it's hard to tell people like, it is already kind of run its course and you've missed the boat because when you get into something and every day you look at your count and it's green, like you just kind of expect that to go on forever. This is the reality, guys. Stocks can go up and they can go down, believe it or not. And depending on your experience level, you may have not actually seen that before. So this kind of stuff, you essentially, for many people, get stuck in the headlights. You're just like kind of staring at not knowing what to do. It happened a lot to Tesla people. Again, you're at this point and the Tesla bulls are like, oh my God, guys, it's going to go to $45,000 a share. That's for real. That's the Farzad dude I've talked to him before on the channel, but they really were saying these ludicrous numbers. And the thing is, guys, you're down like 45%. And so the question always becomes, again, you can tell me a story that you're going to make a ton of money, but ultimately then in earnings, I want to actually see that money coming in. What's really interesting is, remember before we were all talking about the Mag 7, it was like your top tech stocks. This was a fascinating headline, just came out today, July 30th. Only one Mag 7 name in the top 20 S&P 500 year-to-date performers. So essentially, and I'll be curious which one you think it is. I think you probably know the answer, but it is actually Nvidia. So Nvidia is still a pretty good performer if you look at year-to-date numbers, but none of the other big ones are in there. Microsoft, Apple, Netflix, was it Amazon, Tesla? I think those were the top 7. And Google might be in there as well. But there's actually a bunch of other ones. And this is also the challenge of doing YouTube all the time is if you talk about something else, like say, for example, we talk about KKR, or if you want to talk about Constellation Energy, I don't know, kids don't want to hear about that stuff. They want to hear about AI and robots and that kind of thing. So it is what it is. If you talk about insurance, no one wants to hear about that. That's no fun. But this is just the reality, guys. I try to show you guys these numbers because I know you want to know what's going on with your Tesla stocks or your Nvidias or whatever. You show people this stuff. This is your PE ratios. They're like in the 90s, which is unreal. Or you look at your PEGs, which is your essentially what you're looking at is, okay, what's the price of the stock compared to how much a company earns, right? Or what's the price of stock compared to its earnings growth? And these PEG ratios or these PEs, you want this to be reasonable. What's reasonable? PEGs around 1, right? And then PEs around equivalent to your growth. So the problem with something like a Tesla is that like if your profits are falling 45% and you're not actually growing at all, like what is this thing even worse? So then you're just like, okay, according to the PEG, you could be 6 times overvalued, maybe 9 times overvalued because you want your PEG close to 1. Now you look at an Nvidia, it's different story actually because there are real numbers there. Now this is something I want to point out to you guys because it can get a little bit tricky, right? So what I mean by that is PEG, right? So this actual PEG, the you got an A score. It's like 0.08. They actually grew like massive amounts. They really did. The Nvidia came back and their sales were like through the roof, right? Their profits are through the roof. And then the question though was, could it maintain that kind of growth, right? So in terms of actual numbers, they bring in a ton of profits. The stock has performed really, really well, and you can see it's still in the top performance of the S&P 500. However, going forward, and this is something I want to point out, it's saying PEG of about 1.22. So then, if these projections are correct, and I said if, because whenever you look at any kind of forward estimate, it is a projection. No one really knows exactly what's going to happen, a year from now or 2 years from now. No one knows. You're just projecting, guessing. Basically, you could say educated guesses, but this would suggest, okay, around a 1 peg, you theoretically, if the projections are correct, you could be fair valued. I say theoretically, and this is sort of where I show you guys everything, right? I show you the numbers and also talk about the story. For me, the AI hype story, I just don't see it, because in order for Nvidia to keep growing like crazy, you have to find enough customers out there that are willing to buy your expensive chips. So, for example, if your customers are, say, your Teslas or your Metas or your Apples or whatever. I don't think Apple's buying, but I know Tesla and Meta buys these things, or maybe Amazon, for example. Once they buy it, do they need to buy it every year? Is it going to be recurring? My understanding of the stuff is that it's cyclical. The argument for Nvidia would be that no, it's not really cyclical, because we're going to make so much money on AI and then we're just getting started. So you can be the judge of that, and then this is sort of why I tie into the macro. Where are interest rates? What's the Fed doing? What are consumers doing? Are consumers going to be buying said things? So, for example, because you have to put this in real terms, let's say a company like Adobe invests a whole bunch of money in chips or whatever, right? Then they have to go out and they have to convince users to spend $20, $30 a month or whatever to have this new AI stuff. And that's going to be the same for, like, say, OpenAI. They come out with like ChatGPT, or now they have SearchGPT. Can they convince people to buy, things for $10 to $20 a month? The same way you talk about, hey, Nvidia, or not Nvidia, sorry, Netflix or Amazon have new streaming services. Can they convince people to upgrade, etc.? So this is sort of why you talk about multiple things, not just one number. And I'm just trying to kind of tie this in to sort of like where these sort of projections come from and how do you question it or not. Now, some people sometimes mention, hey guys, or hey Chris, why don't you ever talk about cash flow or other things like that? I can. I'm showing you right now. The reason why I don't show you all these numbers all the time is because for the average viewer, this is just too much. I'm just being honest, it's just too much. And also too, this is like the Tesla grades. They're all the same. They're all F. So how many more numbers do I need to dig through to show you that Tesla's overvalued? I mean, you either get it or you don't. You either believe in numbers or you don't. Or you're just more like, hey, I just want to hear fantasy stories that Elon Musk is going to build me a C-3PO from Star Wars. And if you've been following my last couple of videos, you'll see that's what he's been talking about. It's been absolutely insane. The other thing too that's been really interesting is we're seeing kind of movements of money in ETFs. So you can read the headline here: weekly ETF flows, SPY. So that's essentially buying your S&P 500 index. So that gets like 5.3 billion inflow, and then many of the individual sectors you're seeing outflows. So essentially, and I've told you guys this before, for the average person, if you want to be safe, just get an index fund that tracks the S&P 500, and you don't necessarily have to worry about what's up, what's down. The only problem that I'll say is that with the S&P 500 is that our market is a bit out of whack. It is way too heavily skewed to one particular stock, and that's Nvidia or other tech companies. Like I remember the numbers before was like Nvidia accounted for, it was some ludicrous number, like 40% of the gains this year in the S&P 500. So anyone who's at an index, you've probably had a decent year. But the problem is that like that's all tied to Nvidia. So what do we do? If you want to rotate into various sectors, you can. But like I said, it looks like a lot of people are taking money out of sectors and just going into that. I want to show you guys this too. This is a headline here: great stock rotation hinges on Powell signaling rate cuts soon. And essentially the market's betting on, I think it's like a 90% chance that the Fed's going to cut rates in September. You can take a look at this. It's interesting because we've seen this before, a lot of movement towards the financials, right? Essentially the banks and things like that. And moreover, this is actually a really interesting thing is, let's say the Fed does cut, what could you possibly expect? Well, this is some historical data. So you can see here what happens to stocks after the first rate cut. So in 89, right, market was up. 95, market was up. Again, this was after the first rate cut. How did stocks do? In 98, market was up. But 2001, market went down after the first cut. 2007, market went down, right? 2019, market went up. So it can depend. So don't necessarily think that suddenly, the Fed cuts rates and it's going to be an awesome bull market for sure. Not necessarily. The average, you guys can see right here, is roughly 5% after the first rate cut. So I think this is kind of interesting. And this is the S&P 500 average return 1 year following the first rate cut. The other thing too, I want you guys to take a look at this as well. This is a sort of why we track everything in the market, right? Not just one individual stock, not just one individual company. I want to look at like everything, understand it. This has actually been interesting. Stellantis is saying they're going to offer to buy out employees. And for anyone who works at there, I'd like to hear your thoughts if you heard anything that's in your neck of the woods. Stellantis offers U.S. employees buyouts and new round of job cuts. And this was actually the quote here. They've changed the language on how they do this. It says here, non-unionized U.S. workers from vice president level and below, so this is like everyone, vice president level and below, in certain functions can opt for the package, which is intended to, quote, assist those interested in pursuing other career options or retirement. Stellantis said in a message sent on Tuesday to employees that was seen by Bloomberg, there will be no minimum service requirement to be eligible for the offer, unlike previous programs, the letter said. And we talked about this just yesterday's video. There's a slowdown in the auto market. And so essentially, I think, companies are like, well, it's probably better if we buy someone out opposed to having to fire someone and pay severance, et cetera. Maybe they did the math and like buyout's the way to go. And then for employees, they have to think, okay, do I just want to retire? Do I, feel safe in the current economy, or do I want to just start looking for a new job? And this is something that we've been tracking. And, I show you guys this kind of stuff because, say, for example, popular stock on YouTube is Tesla. If they ignore these kind of things completely, don't listen to anything that person has to say, because they're just like, they think their stock and their company is in a vacuum. But you do want to pay attention to what else is happening around the market. Another example, guys, with the CrowdStrike situation, I guess the stock is down again. If you've been shorting CrowdStrike the last month or so, you've actually been killing it. I laugh here because you do have to be aware, though, that this is a risky game. So I don't ever say, hey, guys, shorting is the best thing ever in the whole world. But something like a CrowdStrike, some people have taken short positions. It was a fairly easy call. Now, how much further can it go down? That's anyone's guess, because I asked you guys before in the community if anyone out there uses, CrowdStrike, because I don't, I don't work in cybersecurity or anything like that stuff. So I'm not a computer person, but I can read. I know CrowdStrike exists, but a lot of people who do work with this stuff say it's a, pretty popular and pretty good software. However, they aren't immune. Like when you become that ubiquitous where everyone has your software and you get this big thing, it can cost, consumers, or I should say customers, a lot of money. So Delta, I guess, is looking at possibly trying to get some money from them. It said here they had to, but this is a lot. Delta's handing over 176,000 refund or reimbursement requests after 7,000 flights were canceled. And I'll be really interested in this because, just think about this. You got 7,000 flights canceled. All these people that want their money back, etc. Can Delta then blame CrowdStrike in a court of law to say it's your fault, not our fault, and actually win and get money? This would actually be a major court case. So we'll see. And so, there's worries among, CrowdStrike land that they could hit with a major lawsuit. That's essentially what we're looking at there. Moreover, talking about, what's going on around the market. This is an interesting one. Texas, I guess they're going to get a whole bunch of money from Meta, 1.4 billion, and it has to do with your data and photos. And I wonder if other states are going to be like, hey, if Texas is getting money from Meta, like just picking out something, our budget's a bit short. Why don't we sue Meta? It's certainly a possibility, and you see this quite a bit actually in Europe. They've been cracking down on the tech stocks as well. So you have that, right? This is sort of the macro stuff that you're looking at. You have tech crackdowns, you have slowdowns in the economy, you have layoffs, And moreover, not just slowdown in the US economy, you also have a slowdown in the Chinese economy, which we keep talking about. Every time I see a headline from China, it's usually something like this. Either the stuff is slowing down, the government's trying to intervene some way, and then the last thing I saw yesterday was the government is no longer sharing data of international outflows, which is kind of a thing. And here's another headline: tech stocks sink as war jitters fuel rush to bonds, markets wrap. And essentially, the question you always have to ask yourself when you're managing your money is, how much risk do you want to take? Do you want to take essentially no risk but limited gains, or do you want to go for those bigger gains but have a higher downside? For me personally, I think it's good to mix it up, right? Get some things that are like, you know what, I just want that 4%. I can sleep well at night. I don't have to worry. I don't have to be glued to the news all the time. Is my Nvidia stock going up or down? And also too, guys, throw some money in the market because, hey, if there's money to be made in AI, why not? But the mix of bonds and stocks, or say cash levels, that's going to be up to you and your particular timeline and what your goals are. But I do want to mention this stuff because I think it's a disservice to you if I say only talk about the hottest stocks or whatever. Unfortunately, though, on YouTube, that's essentially what all the kids want. They just want your, hypey doggy coins and your hypey stocks. But the problem is, though, for a lot of people, retail, you end up getting hurt because you buy at the top when your favorite YouTuber tells you, no, guys, this is just the beginning of the run. This is just the beginning. Even though the stock has already gone up, 300, 400% already. And they keep telling you it's the beginning. But that's sort of like if you're not paying attention to the larger macro environment, you'll get burned. The other thing, too, which is something that I've been watching, and I don't think people talk about enough, the dollar is still very, very strong. So this is year to date, right? You can see it's gained. The green here means the dollar's been gaining, right? So in the past year, it's gained on all the major currencies. The only one that's really stood par is the British pound. Other than that, and I'm here in Korea, I can just tell you that the dollar's been really, really strong. And again, I want to show you guys what I think is the most important chart of the day. I know essentially if you watch TV all the time, they'll say, hey guys, after that first rate cut, everything's going to go wild, new bull market, etc. And I'll just show you this. This is the average return after the first rate cut. And my opinion on these things is that if you want to be happy and you want to know the secret to life, it's low expectations, because it's always better to be surprised than be disappointed. So I do appreciate your time, everyone. Love to hear your thoughts on any of these stories. And I'll catch you all in the next video.